Good evening, sir.
Good evening. Good evening.
Good
Good
morning,
morning.
sir. Good morning, sir.
Good morning. Good morning. Good evening.
Good morning, sir.
Good
Good
morning, sir.
morning. Good morning. So thank you everyone for joining the session. We'll give 30 more seconds for people to join, then we'll start the session today.
Good morning, sir.
Thank you. Thank you.
Good morning, sir.
Good morning. Good morning.
Good morning, sir.
Good morning.
Good morning, sir.
Good morning, Sai.
Good morning, sir.
Good morning.
Good morning, sir.
Good morning.
Good morning, sir.
Good morning. Think everybody's there. So good morning.
Good morning, sir.
Good morning. Good morning. As we discussed last time, and we used to do this before as well, but in between COVID and all that, that practice kind of.
Good morning, sir.
Good morning, Sanjay. And
Good morning, sir.
hey, good morning, Ratnesh. So,
Sir, good morning.
good morning, Prince. So that practice kind of got little, stopped. So what we used to do, and which I want to continue to do, is at least um, last working day, half an hour, 1 hour, whatever, we should select some topic related to SAP Business One, and then we spent not only that I'm doing the session every time. It could be uh, other senior members also. It could be Sanjay, it could be Ratnesh, Amit, and rest of the people, Sudhakar, and so that way. And we can also have some functional topics also. We can also some technical topics also. So that way we can collectively learn. Many times we know the things, but it become a refresher for us. Many time it may not be new topic, but at least when we discuss, we talk about, we'll continue to do that. The second thing which we used to do, but in between all this COVID situation has stopped, last day of the week, we used to also do celebration, the birthday, or we have a Holi or Diwali or whatever festival in between. So we'll continue do that also. We restart that also because that got interrupted in between. So some of the things I wanted to we would like to start. So now coming back to the topic of today. Today is basically what I want to talk about is the virtual fixed asset. So last week we had a class about the standard asset. In SAP Business One, there is also a concept of virtual fixed asset, which is similar to the regular asset. Then there are some differences also, which is there in this asset cycle as well. So there are some differences on case by case. So this is actually fairly small topic, but a little bit of a interesting functionality which is there. So we'll talk about this topic of virtual fixed asset. Now, before I go to virtual fixed asset, what I want to do is I just want to briefly recap that in the asset cycle, what we have what we have discussed. So just a recap for 130 seconds for rest of it, like what asset cycle which SAP B1 allows. First and foremost, asset management, if I'm not wrong, is a new module. In 8.8, it was not there. I think 9.0 or somewhere it is started, Sanjay. I'm not sure exactly, but it wasn't there in 8.8 though, right? If I remember correctly. Yep.
Yes, sir. It was from 9.0.
Yeah, you're right. So it was introduced in 9.0. Before that, there was no asset management actually. And then, so what we discussed in the last session was that there are some settings in SAP in which first and foremost we have to enable fixed asset as a part of company settings. So that is the first small configuration. And then just to refresh, we talk about there is a setup which is required. In the setup, if you go back here, there are a few setup, just to quickly 30-second recap. One of them is account determination. So in a standard SAP, we can have a different type of account determination. So we took an example, let us say I have a vehicles and we can have a different asset classes. And let me select something relevant. So if you see, let's say motor vehicles. So if you go to motor vehicle, so here we have a different account for different functions, because when we are doing depreciations, capitalization, and various other functions in the asset cycle, it is affecting the finance or GL posting in the background, and these are the different GLs which get affected. And these GLs, just an example, it could be whatever we want to. And then we say that we can have a different account determination also, which basically means that for motor vehicles, you can have a one account, and for other kind of asset, you can have other accounts. You can have a different account for different functions. Then we talked about that we can define different depreciation type. So these are like an straight line, and what kind of a depreciation you want to define. So we discuss that as well. In industry, straight line is what commonly used, but it could be whatever as well. And the straight line, basically what it does, it takes based upon acquisition value and divide with the unit of time. Depreciation area is basically that where we're going to use that. So we're going to use it for our main purposes. We're going to use for taxation. We're going to use for some other reporting. So depreciation area basically define the usage of asset accounting for what purpose, because my asset calculation for my accounting versus taxation could be same, could be different. So that is what this basically means. And then the last, probably the most important, is the asset classes. So what does asset classes do? We can have a different asset classes. So like a furniture is asset class, plant machinery, motor vehicle, or whatever. And then what asset class does, it basically allows us to link everything together. So when we select this asset class motor vehicle, it takes this depreciation area. There are two depreciation area. It takes that account determination, which is very important, because in asset accounting, this account determination is always the challenge. My account is not matching this, that, and all that. And one of the primary driver for that is account determination, which is linked to the asset class. And then there's a depreciation type, and there's a useful life, which is defined, which can be changed. This is a standard that a motor vehicle, my useful life in the month is 72 months. Then we discussed that what kind of functions we have in asset accounting. In the last session, we discussed that we can define asset master data, we can do a capitalization, we can do credit memo, we can do retirement. We talked about retirement can be done in two different ways. We can do retire by selling. So let's say we have our car, and at the end of certain point of time, we sell that car. So we can do retirement of the car by selling, or retirement of the asset we can do also not just by the selling, but also by scrapping. So there are two methods. We can transfer one asset to another asset. You can do manual depreciation, we can do auto depreciation, we can do asset revaluation, and fiscal year change. So now this 2020, when we start next year, so we have to start fiscal year. And then we discussed here there is something called different report which are there, asset history report and different asset transaction report. These are the standard SAP report which can be used in SAP. So that is what we all discussed in the last class. Now we want to go and discuss this concept called virtual fixed asset. So what is this virtual fixed asset is about? So in the virtual fixed asset is used for an interesting phenomena, and it's just an extension. And what virtual is, let's say I'm using, let's say laptops. I have a mobile phones. I have a office chairs. We have an office desk. So if I have an office furniture, office desks, office laptop or desktop, so that office furniture is also is an asset. And you have a 20 chairs, 40 chairs, 50 chairs. So that chair is a asset. That laptop is a asset. That desktop is asset. Now, what does the virtual item function allow you to do? This is very important. It allows you to do the template item for representing the fixed asset. This line is probably the most important. So the purpose of the virtual fixed asset is basically acting as a template. Apart from that, virtual fixed asset do not do anything. It is just a template. So what is the meaning of it? And we're going to do exercise. So let's say I have a chair. Now in my company, you have a 50 chairs. You might have 100 chairs. So if I have to purchase, let's say 20 chairs or 20 tables, 5 laptops, 3 desktops. So how do we maintain those assets? So that is what we need to talk about. So what does this do is allow you to enable purchase of the identical fixed assets. Identical, which basically means that if I'm buying 10 chairs, I'm buying 5 laptops. We are buying 20 some machines. They are identical. What does this do? Automatically create the same quantity of asset, master record, and capitalize for you. And then you can also do serial number. Now let's go back to fixed asset. So here, if you go to fixed asset here, and if I try to create a fixed asset, if I go to change mode, one very interesting thing will you notice here is that virtual item button is not active. It is display mode. It is display mode. So when this is making, why it is not available? Because this is only available if your number range is not manual. So number range has to be automated. That is the first configuration prerequisite. So if I select, let us say FA, which is an automatic, then what system does, it virtual item button get activated. So that is the first prerequisite. We can select it. After that, we also have a serial number, which basically means whether for this item serial number is needed or not needed. You can do serial numbering along with it. Do you want to keep it purchase item or not? Let's say I'm not creating serial number. Now here I'm buying some item, let us say office here. Then we can have a asset class called asset. Then we can put a unit of measure, whatever each. We can do sales data, whatever each. Inventory data, unit of measure if you want to do each. And then in the fixed asset here, status is new, and we can choose the asset class. So let's say we choose asset class called furniture. So we are buying office chairs. So we select asset class, furniture. We go to asset group, and in here we can say office item. We can choose any depreciation group. And then we can define location, which office, Delhi, this, that, whatever. Capitalize it blank because we have not yet capitalized. All the values are 0. Net book value is 0. Acquisition value is 0 because we have not acquired it. So now what we are doing, we are creating and now this is the number. You see the FA00007. This is the virtual fixed asset item number. And then we save it. So see the message in the bottom, fixed asset 0007 created successfully. So we created a fixed asset. Now we want to go back to the next step, and that is called capitalization. So here, when you're creating a fixed asset, that the series setup, remember I talked about the series setup. So FA, this is serial number, and this virtual checkbox is only available if numbering series for the asset master defining is automatic numbering. So that's a prerequisite we talked about. Now, the next thing is how do we capitalize? So capitalization can only be done with the AP invoice document. You cannot directly do that. So we go to AP invoice. So after that, we go to AP invoice, vendor invoice. So we go to purchase order. We select any vendor we want. And then here we select that item, that FA007. So that appears here, FA007. We select that. Now let us say we take an item and we take some price and we say this chair is, each chair is for, let us say 6,000 rupees. And how much quantity we are buying. So let's say I'm buying 4 chairs. So what we are doing, we are purchasing 4 chairs. And the unit price of each chair is 6,000 rupees. And then like any AP invoice, we save it. And we create purchase order. I wanted to create, anyways. So I want to do create AP invoice. Okay. Purchase order. We save it. Back. Okay. So 2 more steps. So those are the regular steps as we do. We add. Okay. So now we create a purchase order. We create a GRPO, and then we create a invoice, AP invoice. Now, what happens is, so this is a regular purchase order for asset. We did last time also. It's a regular GRPO, like anything, and AP invoice, like anything. You can directly create AP invoice also, which is what I was planning to do. And then there is a capitalization document. I click on the capitalization document. Now see what happens. Now this is different. So now what happens is, because I have purchased 4 office chair, then system automatically created my 4 asset, FA008, 009, 0010, 011. So these 4 asset has been created. I don't need to create those 4 assets. That is what the virtual asset item does. It acts as a template of the similar type of asset. So we can create those assets automatically. If I'm buying, let us say, some mass 20, 30, 40, I don't need to create each of these individual assets manually, one by one. Secondly, the benefit of this is saving the time and all that. That is why you need to have an automatic number range, because system is generating the number. And because system is generating the number, therefore number range has to be automatic, because system will be creating the number as per the number range defined. That is why this number range is here. Now this is the 4 asset has been created. This is the description of asset. This is the 6,000, 6,000, 6,000. That is the price of each chair. After that, if we go back and or we can see each of these items. So if I go to item asset master data, so this of asset master data got created. this FS item. Now this virtual item is not on. Now see that here. So when it create asset, virtual item is not on because it's an actual asset, not the virtual. Virtual is just a template. And we have a sales category and purchase category active. We go to fixed item. Now status become active. My asset class is furniture. This is my item group, whatever we have selected. And then capitalization date is November 30th, because today we have capitalized. How much we have capitalized for? 6,000 rupees. So this each one chair was for 6,000 rupees. And the rest of the thing is same, which we discussed in the last class. So if you see the values here, 6,000 is acquisition value. And then we have a 700. This is the same calculation. Remember, number of month, which is defined into this asset. So we have a 120 month. Other calculations, depreciation calculation, 100, 100, 100, 100, 100 coming up is the same. This is 0, 0, 0, 0, 0 because April, May, June, July, August, September, and today is September. So 5 months 0, 0, then again it take $100. All those things are exactly same. You can link to cost accounting if you want to. And these asset has been created. Now, if these assets created, this is exactly after this, the whole process, rest of the process is same. So I don't need to repeat that. This was the only thing which is different. So if I go to fixed asset, and if I go to asset run, and here we can check different asset runs as well. And if you go to preview, in the preview, I can see asset FA008, 009, 0010, 011 for this is the amount, $100, $100, 100 rupees, 100 rupees, 100 rupees for each of these assets. And if I want to execute and say continue, then I done the automatic asset run. This is exactly same way as we did before. If I go back to the asset master data, and if I see, if you look into the asset master data, if you look into those assets, so this is, let's say one of the asset which we created. Now, if I want to go to depreciation, if you go to the values, so $100 posted depreciation, automatic creation, so we have done. After that, rest of the cycle is same. So we created a virtual asset, we purchased it, we did a GRPO, we created an AP invoice, we did a capitalization, and after that, we saw the asset master get created automatically, and after that, we run the depreciation run like we run for any depreciation. So this is a quick summary of what the virtual asset is and how it can be utilized. So with that, thank you very much. Thank you, guys.
Thank you, sir.
Thank you very much.
Thank you, sir.
Thank you, sir.
Thank you.
Thank you, sir. Thank you, sir.
Thank you, sir.
Thank you, sir.
Thank you, sir. Thank you, sir.